All right. Well, welcome to this week's market review. My name is Bennett McDowell with TradersCoach.com, and we've got a lot to talk about today. Okay, so markets are down today. I'm going to go over the charts. We've kind of anticipated this particular move down. If you look at my previous videos, you can certainly see where we've talked about this as a matter of happening eventually, and now it's happening, of course, right now. All right, so we're going to take a look at that. We're going to take a look at Bitcoin as well. Bitcoin broke out of a pennant to the upside. We want to see where the levels are on that. So we're going to get to that. Before we get going, though, let me just go through a few administrational items, and then we'll get going. All right, first thing I want to talk about, of course, are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really do go hand in hand. But we want you to be aware of the risks, of course, and always trade with money you can afford to risk, called risk capital. Always calculate your risk control on each and every trade. We have several books on that, and I'll put some of the links below in the recording if you're interested in that. It's a really vital, important point to be successful in trading the markets. And then also, too, of course, work on your edge in the markets. It doesn't mean you're going to always win, but you do have to have an edge in the markets to do well. And also to talk with your financial advisor before implementing any of the ideas we suggest in any of our webinars like this one, just to be sure what we suggest is suitable for you. Of course, we don't know your personal situation, and of course, they certainly should. All right, so a couple books on money management here that can help you. I've got my new Art of Trading book on the far right, second edition, coming out later this summer in early fall. It's going to be, I think, the best book I've ever written. It's going to be a big book, about 450 pages. I'll put some links at the bottom for you to order that. All right, so let's talk about some of the key economic events coming out. All right, so it looks like the audio, is the audio okay? All right, so good. Audio is good. All right, so core CPI was out, and we're going to talk about that. FOMC minutes coming out at 2 o'clock today. That's going to be interesting. And initial jobless claims tomorrow, PPI tomorrow, 30-year bond auction. We're also looking at crude inventories today. We'll see what was cooking on that. And we're going to talk about some announcements that came out that will affect interest rates. So the Wall Street Journal, of course, was right on top of this. March inflation comes in hotter than expected. Annual inflation, all right, ticked higher in March, and the underlying price pressures remain stubbornly strong, raising further questions about how much the Fed will be able to cut interest rates this year. So, like we have said before, I really feel we'll be lucky if we get 2 rate cuts. If inflation continues to go up, all right, it's very possible we get none. However, it's an election year, so I think they're going to try to do one to try to create some type of enthusiasm and keep the markets relatively stable a little longer. Stable, of course, in quotes. The market is already, I think, really, really high, and also getting ready for a massive correction probably later this year. But for right now, that's kind of where we're at on that. All right, so let's keep an eye on that. But that's no surprise really to me. I was kind of expecting this all along. When we look at charts, and we're going to be using software I created, and we're going to put the link below for you to learn more about that and purchase it. I don't see how anybody can go into the markets without having some form of software tools. Otherwise, you're really throwing darts at the board, so to speak. So if you don't have any tools, if you don't have an edge, that's what TradersCoach.com is all about. So definitely check us out. All right, so here is the daily chart that I prepared on Sunday. Now, we're going to look at the live charts in just a moment, but here is certainly the one that we prepared on Sunday for those of you that subscribe to our services. Now, a couple things I want you to take away from this. You'll see some numbers here, and this is the Elliott wave account. So there are 5 waves in a trend, so to speak. And I'm going to go to full size here so you can really see this. So there are 5 waves, and at the end of the 5th wave is where the trend usually ends. So as you can see, I've got a big target up on the far right-hand side of this chart that is indicating this wave 5 target zone. So when we get up to this target zone and the market sells off from here, then we got to be a little concerned. Now, a couple things. We came darn close, didn't we? but technically that's not in the target zone right now. So 15% of the time, wave 5s fail and don't make it to the target zone. 70% of the time, they make it to this target zone. So 70% of the time, the probabilities are with us that we'll get to the target zone. So that's going to be interesting. Are we close enough that we could see a major sell-off? It's possible, about 15% of the time, but I'm a probabilities guy. So I'm going to stick with the probabilities on this, indicating we are probably not at quite at a market top. So then again, the next question is, well, what's going on right now? Well, what I think is going on, like I said earlier, we're in a profit-taking time right now in the markets. It doesn't mean we've switched yet to a bear market. It's way too early to say that. Right now, it's an indication we are going down into this red box on the chart here, which indicates a fib retracement, which is a normal area between 38.2% and 61.8%. That's 70% of the time markets correct to this in what we call a wave 4. So this is a 3, 4, 5, and now those are waves inside that major 5th wave I showed you before. All right, so I'm expecting the market to pull down to anywhere from 37,580 down to 36,150, and then we should see some stabilization come in and the market pull up higher. So in terms of a rough way I think this is going to go, I think we're going to get in here and then start to rise back out. That's what I think is going to happen here. So we got a little bit more pain to incur in the markets. It's coming down to this profit-taking zone. But again, I'm going to reiterate that I do not think this is a bear market yet. I think one is looming, but I don't think this is quite coming yet. And we're going to take a look at the long-term charts in a minute as well. Before we do that, let me just quickly go on and take a look at the S&P 500. Similar scenario here, more highs. Now, on the chart on the far left, this is a 60-minute chart where every price bar represents an hour. This is a daily chart where every price bar represents a full day. All right, we call that an intermediate look. This is a short-term look over here. And then this is a weekly chart where it's a long-term look. One of the things that we want to take away from this is we're not yet at the target zone as of Sunday. And we're going to look at the live charts in a minute. We're also coming down here to this profit-taking zone here in the S&P, very similar to the Dow. So I'm thinking we're probably going to pull back to 49,112.07 down to 46.94 before we see some stabilization and a move back up. So if we look at this center chart here, this correction is going to kind of look something like this. We're going to come down a little bit here. We may come down into this territory and then spring back up and go back into the target zone later this year. So that's what I think is going to happen not only in the S&P, but also on the Dow Jones Industrial Average. Now, what's interesting is we've got a green PTF here on the weekly chart, very similar to what I'm going to show you on the Dow in a moment. We have that as well. So that bodes a good case that the top's not in. This indicator has a 75% accuracy rate, and I developed this many years ago, so it's been thoroughly tested. So that's kind of where we're going with that. All right, so that is the S&P. Let's go on and take a look now at the NASDAQ. All right, so the NASDAQ also has not quite reached its target zone on the far right. My target zone for the NASDAQ eventually is 19,164 to 24,880. And the pullback that we're in right now in the NASDAQ should come down around 14,993 to 14,038. Okay, so that's kind of where we're at this particular point. All right, so that's the NASDAQ. So all these markets have a little bit more room to go, all these major indexes. All right, on the housing market, this I update every week and bring it to you. And right now we can certainly see that in the Case-Shiller index versus the CPI, the Case-Shiller is the red line, and that basically is measuring residential real estate in the United States, the average prices. And then under that is, of course, the CPI, which is a measure of inflation, okay? So basically, as you can see, if you go back, this chart goes back to what, the 1970s, you can certainly see that home prices have done well in terms of keeping above inflation. So that's why they've been generally considered always a good investment. Now, like the stock market or any markets, there's times when things get overdone. And we saw this back in 2008 here, the 2008 financial crisis, which kind of started in 2006. And notice it stayed bubbled for quite a while here. But eventually, it imploded and the markets came down. Then they recovered. They got to a level that was once again attractive and they moved back up. But look where we are now. All right, here we are way, way up here. And yet the CPI is way, way down here. So we're even further away from the CPI than we were in 2008. In order to get down to a comfortable level here where the distance of the Case-Shiller is appropriate in relation to the CPI, you're talking about a 40 to 50% move down. So that is indicating a correction in the housing market that's due at some point for that massive type of move down, okay? So keep that in mind. So it's not a matter, I don't think, of if, it's a matter of when. And it's going to be a factor of many, many things. Interest rates come into play, the amount of homes on the market, the lower interest rates that people are hanging on to that aren't really pumping a lot of homes into the supply spectrum of this model. So you got to keep all that in mind. However, if a recession comes and people lose jobs, it's going to throw all the models off. And at that particular point, we could see housing come crashing down. So again, we'll see what happens with this. But if you believe in statistics and you believe in the normality of markets moving back to their norms, then you have to take this into consideration, okay? So that's kind of where we're at now. And you can stay bubbled for a while. So just because we haven't crashed yet doesn't mean we're out of the woods, so to speak. All right, this is another chart that I usually show every week. And let me just pump this up so you can see it real good. This is home prices versus incomes. Now, this was done by RE Venture Consulting, which did a real nice job on this. But it was done back in the summer of 2023. Things have actually gotten worse now. And the situation is they're probably going to do another one, I would think, in 2024. But again, notice what they're telling us here. So back in this point here in 2008, we had a situation where prices of homes got far away from the average income. So that's this dotted line down here. So I'll color that blue so you can see it. Now, look where we are now, okay? And this was back a year ago. It's even worse now because prices have actually gone up a little bit. All right, so, and I think a lot more than incomes. So now we're getting into a real unaffordably level for most people out there to buy a home. That's concerning, and that is an indication also of a bubble. Again, these bubbles can last a while, but you get the picture. If we go here to the debt to income ratio for all home buyers, now we're taking into account debt like credit card debt and things like that. And again, if we compare this to 2008 here, they call it the 2006, 2007 bubble, then look at it here, and it's even higher now, okay? Credit card debt is even higher. So when this was done in the summer of last year, it was a 40%. Basically, the home buyer debt to income ratio, also known as DTI, is averaging close to 40%. All right, that's the worst affordability levels on record. So that's even worse than the 2008, and it's worse now. So again, here's another graph pointing to a situation of a housing bubble. So you got to kind of, when you summarize all this and take this into account, it does kind of bring it all home, right? And if you have any comments on that, let me know. And don't forget, real estate's very local, okay? So what is happening nationwide may not be happening in your particular local area. But overall, if we experience a market crash, which is, I think, out there on the horizon, it would affect most all areas. All right, this is kind of an interesting thing I found on the internet here, where it says states where buyers need the highest income to purchase homes. So Hawaii, the median list price was $850, and the household income required to purchase is $2,002. Now, this is assuming you're going for a regular type of conventional mortgage, and you're not putting a lot of cash down. Okay, just the normal amount. Massachusetts, 777, 185. California, that median home price is 730. I think that's a little higher than that actually in California. So the home prices here are 173, or the income is 173. New York, median home price 652, and the income required is 155. So kind of interesting as we go down here. Idaho's at the bottom here, but those are pretty significant income levels that you need to have in order for somebody to be able to take a conventional mortgage out and purchase that, thus pricing out a lot of first-time home buyers, obviously. Okay, so kind of interesting. All right, here are some states where the lowest incomes to purchase homes. West Virginia comes in as number one, where the median home price is $231 to $55,000. So in other words, $55,000 income is required. So now we're getting more into an area where people that are first home buyers are going to be kind of forced to look. But again, when you leave very populated areas and go out into the suburbs, so to speak, you may not have the income that you would have in a city, so to speak. So it's all relative. But in any case, West Virginia, Ohio, Michigan, Louisiana, I won't go through all the numbers, but you can see them there in front of you, that these are the most affordable areas at this particular point. So kind of an interesting stat, I thought, certainly since some of the bigger areas that are more popular areas are so very expensive. New listings are coming up somewhat this particular round. So far, we'll see what the spring holds. Again, I think everybody's waiting for that rate cut in June. We'll see if we get one. Certainly not very promising as it was. We'll have to check out the Fed Watch and see what the latest numbers are on that coming up. So, in housing, again, it's very local, so it depends on your area, but I'm concerned, all right? I'm concerned about the housing market, and yes, I'm concerned about markets in general. All right, let me come out of here and let's go to some of the more up-to-date charts today. All right, so here is our Dow Jones Industrial Average, and the first chart I'm going to bring up here is this one here, and this has two ranges of blue lines. All right, so we have one up here, and then we have one down here. And so this is the profit-taking correction, which is where I think we're headed now. And then after we get down here, I think we'll head back up here. So my target for the Dow is 40,352 to 47,577. And both these correlate to about a 70% probability rate. Not 100%, but roughly right around there. Now, if the market does not do what we anticipate it doing, which sometimes that's exactly what happens, all right, then we got to kind of know where things are falling apart. Well, one of the things that we're going to look at is, let's see on this move down if we stop at that target zone, right? So the profit-taking target zone, will it hold? All right, so that's the first thing we'll check. Sometimes they go a little lower, so we got to make sure we kind of don't panic, but let's see what happens with that. This point here, however, is a time to get real concerned. If we go below the October low on the Dow, then there's a high probability that this is not going into this target zone. And this is going to be one of the 15% times. So basically, at this particular point, it would have to go below 32,327 for us to get concerned that we are in a major sell-off at this point. And could that happen? Sure it could, all right? Everything is possible in the markets, but it's not the probable outcome at this point. All right, so that's kind of my thoughts on that, and that carries over to most of the indexes I'm looking at. All right, I do want to cover really quickly the crypto market here. And the crypto market popped out of a important pennant here. So again, this is the daily chart. This was a pennant we drew. It popped out of the pennant and formed what we call one of our pyramid trading points, which is part of our art software that tells us that a trend to the upside is commencing, and you could possibly take a trade at that particular point. So the bottom of the pyramid is important because prices should not go below that in this uptrend. So as long as crypto basically stays above the lowest price bar representing that flat part of the triangle here, all right, then we should be A-okay. So that would be a low of 64,500. Okay, so as long as we stay above that, we should be A-okay. And we have a green PTF down here. So once again, this is indicating more highs with a 75% probability. So our next big move up on crypto doesn't mean you're not going to have volatility of up and down days, but we should have one more hook to the upside on this major move up. So that would mean something like that before we reach some type of top. Now, the short-term top on this is 75,079 using the charts to 83,898. So that should end what we call wave 3. If by chance wave 3 is already over, then we'll take this low out in this target. That's why I drew this target zone as an alternate scenario. Then Bitcoin would head down to 53,382 to 40,484. The fact that we broke out of this pennant and put a pyramid trading point in place is a bullish sign, even though we're having a little bit of a pullback since that happened. All right, so that's kind of where I'm at with that. Long-term chart on the far right, notice that we have a very strong Elliott wave 3 in process that's nowhere near over, and we have a green PTF. So once we reach this top here, this will create a 3 top here inside a wave 3. So then we should have a 4, 5, and at that point we end wave 3 here. And for those of you, probably most of you, that don't want to leave your money in for a long period of time, would take their money out at that point. As a trader, you could take your money out here between 75 and 83. Once it tops, I wouldn't just put a sell order in, but follow it up to where you see bearishness coming back in. And then the idea is once this top is here, we should segue down to some new target zone. So I'll have to redraw this if we go higher. But that would be another place to get back in after it pulls back if you want to trade this thing instead of buying and just holding it, okay? I think regardless, buy and hold, as long as you don't mind the volatility that would occur, you should be okay for quite some time in the cryptos, especially Bitcoin, okay? So I just want to cover that. All right, and that also applies to, let me just go over to GBTC, because a lot of people use GBTC to play the Bitcoin market. This is the stock equivalent of buying the coin. It's the ETF GBTC, and it's the same similar situation. All right, so again, we expect more highs on both these markets. And notice we got the pyramid as well here. And if I drew here a pennant, we would have broken out there as well. So all is pretty much in sync. And to me, it looks like more bullishness on the coins, but you will have some volatility. All right, that's going to lead us to a couple other markets before we go here. Gold is one I want to take a look at. It has soared. All right, my concern with gold is that, you know, we're getting close to my target was 220 on this to about 240. So we're pretty close on this, but I have green PTF, so we're not done with it. Okay, it's going much higher. And look at the owls, which are the histograms here. These are owls on all these charts. Strong, strong. So I'm probably going to revise my target higher, a little bit higher. So we're really cranking it up. But, you know, if you look long term on this, here's kind of something interesting. This is a 3, this was a 4, and this was a 5. So this back in 2011. Then we had a multi-year correction and profit taking, okay? And then we had this type of thing. And this is a weekly chart. So this is long-term what's going on. So we're still moving up high, but we do have bearish divergence. So unless this owl can increase and get above the 2011 one, then this is a 5 that we're in and not a 3. So why is that significant? Because that means that at the end of 5, gold's done. And so far, it looks like we're in wave 3 inside wave 5. So you've got some more room for this to go up for quite some time. So maybe if the market sells off, crypto goes up, gold goes up, and silver should go up too. We'll take a look at silver, but these could top when the market finally reaches a new bottom at some point. Now, here's how powerful the pyramids are, and even you can see the pennant we drew in here. So this broke up, initiated a buy here, and now it's off to the races. So silver is doing pretty good, and I would anticipate this to be the beginning of a fairly significant move in silver. All right, and then USO is another one, and then I'm going to wrap it up with the bonds. I'll take a look at natural gas too, but that was pretty much bottoming there. All right, so natural gas here, also not natural gas, oil here, poised to make a new high on this. We kind of think in the oil market here, we're looking at this summer probably 100 to 120 as a target. And again, it will pull back a little bit, but it certainly seems to be moving up. And we had to buy, for those subscribers to our market opportunity report, we had to buy in this pretty early on. So you should be doing really well on this. Now, UNG is another one I want to look at, which is natural gas here. And this is one we're waiting for a bottom. All right. It's not in yet. Okay. We got to kind of wait. So we're going to see it. I mean, you could have a bottom in here, but it's not bullish enough for us to exit. We still have a bearish pyramid active on a long short trade here that has not been stopped out yet. Now, if you were trading the daily chart, yes, you would be out and flat. We have bullish divergence building here. So we could be getting ready for something to the upside, at least a relief correction that could be very profitable. So stay tuned, and we'll take a look at this in our more report for a possible buy coming on this at some point, but not yet, okay? And then TLT is something I want to take a look at as well, which is the ETF for the bond market. Now, there's a lot of folks out there excited about the bonds and all that kind of stuff. Right now, I'm not, okay? I think according to our PTF indicator here, again, with a 75% prob rate, we're looking at a bottom not in, okay? So, and we're coming back down now. So I'm not ready to jump into bonds or recommend them yet. At some point, they will be a great buy. I don't even think I would short them yet. I think the short opportunity is done. But in terms of a tremendous short here, you can certainly see all the way down here. So at this particular point, you might get one more leg down, new low, and then I'm looking for a bottom for a long trade, but it's not there yet. Okay. All right. So that takes us to the end of the session today. So my final thoughts is that we can expect some selling to continue until we get into that target zone that I mentioned before. Let me go back to that real quick, just so we can kind of see that visually. So that's going to be basically this area on this chart here. So I'm looking for us to get eventually down to 37,000, roughly to 35,000 before we see some stability. Now, what happens is news events can cause this, like what basically they're talking about with the higher inflation. Something usually causes these things, but maybe we'll get down to this target zone and then they'll cut rates, okay? And everybody will be overjoyed again, and it will go back up for one more high. And then we'll get up to that high point, and then something else will come along to create the top. So what is eventually should happen when the market rolls over to a bear market, which I think it will in late 2024 to 2025, I think what you'll see is the mood will switch. When you're in a bullish market like this, for the most part, the bad news is ignored for the most part. And we've had that, okay? We've had higher inflation since October, and yet the market kept going up. Now things are getting a little jittery, more news. So this is probably a news reaction that's causing some profit taking. And again, a news reaction probably will stimulate it back up to the upside. We'll see. Okay. There's no guarantees, but that's kind of what I think that's usually what happens and kind of what I'm expecting to happen here. And then once you get to a top and you begin a bear market, which again, I think won't happen until 2025-ish, then the bad news is accentuated and the good news is ignored. So the mood shifts to pessimism. All right. So we'll keep an eye on that as well. All right. So that's it for today. And again, I'll put links up a little later on in the recording. And that if anybody has any comments, feel free to put those in there. If you're seeing drop in prices in real estate, love to hear about that as well. Okay. So put those comments in there. Or if your market seems to be fairly stable. I think basically prices have not gone down that much overall, but there's not a lot of demand right now either. So sales are very spotty. That's kind of what we're seeing in the real estate market. All right. Thanks, everybody. We'll see you next week. And don't forget, for our clients, we do have the client support webinar coming up in just about 30 minutes. So hopefully I'll see many of you there. Have a great week, and we'll see you back here next time. Thanks so much.